Okay, so we're here to continue chapter 3, non-cash gifts. So when it comes to contributions or donations, donors can give in the form of cash, check, or direct deposit to the bank account of the church. Other times, they might give non-cash gifts. Okay, so for non-cash gifts, it could range from simple supplies or simple equipment for the church, or what do you call that? It could also be in the form of let's say vehicles or buildings or land, or sometimes just the right to use the land. Other times they could also be, personal properties such as jewelry, furniture, what they are, ownership interest in a privately held business. There could also be, let's say, inventories or old inventories that the church can sell to generate funds. Maybe, what do you call it? A small business which the church can operate, just let's say a cafe or a restaurant or a cafeteria or something like that. They could also be in the form of life insurance. The church would be the beneficiary. It could also be in the form of intangible uh, property rights like copyrights or patents or something like that. Okay. So when it comes to non-cash gifts, again, the church would have the option to receive them or to reject them. Okay. Of course, there would be instances wherein the church would reject such donations. Again, if it would contradict the purpose and the mission of the church, and if it would restrict some of their usual activities supportive of the purpose and the mission, then they might have to reject the donation or the gift. Okay. So some of the considerations would be budget wise. The church would have to ask, are we going to spend money on this? Are we going to make future payments by receiving this particular gift or donation? And if so, would we be able to afford such payments or cash outflows in the future? And would the eventual benefit of receiving the donation be positive to the church? Okay, when we say positive, meaning the benefit that the church would receive would be greater than the expense that they're going to uh, cash out, or they're going to spend, of course. Okay, if they're going to pay, a small amount of money for a huge donation, then that might be acceptable. For example, if the church would receive a real estate, let's say a piece of land, okay, and the piece of land was given for free by the donor. So the ownership was transferred from the donor to the church, and the church was named the owner of the land. Okay, they would be subjected to real property tax. Here in the Philippines, we pay real property tax annually. So every year, have to pay a small amount to the LGU, the local government, normally the mayor's office. Okay, so that is going to be a consideration. How much money are we going to spend by keeping the donation, right? So that's just an example. Okay, or let's say if the church would receive a vehicle as a donation, so of course the vehicle would need gas to be operated, and then it would also incur a certain amount of money to be maintained. Of course, we have change oil. At least I'm not sure if it's at least once a year or twice a year, or depending on the mileage used by the vehicle. And then, of course, certain changing of tires or other things needed for maintenance. Okay, so there's the benefit of being able to use a vehicle, and then there's the cost of maintaining said vehicle. Okay, so have to the church would have to weigh the benefit and the cost of receiving that kind of donation. Okay, so that's a consideration, the cost, okay, additional cost or additional burden to the church. Another would be the legal implication. So later we'll be discussing what they call some risks that may be associated with receiving certain donations. So for example, if a donor gave a huge amount of money, but the church cannot be sure where this money came from, it might be a result of, a crime, or they're probably committing fraud and they're trying to, launder the money by giving it to the church or something. Or it's a possibility, it's a kind of risk, but of course the church must ensure that the money did not come from unlawful acts. Okay, so I'm sure here in the Philippines, or especially Baptist churches, we don't normally accept I don't normally receive large amounts of money as a donation, but when we do, of course, we do speak with the donor. In a way, we do check if they have the capability to give this amount of money, if it came from a legal source. Let's say we do know that they're operating a business, so they're most likely able to give this amount of money, then that's fine. But if there's a question, let's say we know this person to be, they don't have a business, they don't even have a job, but suddenly they have this large amount of money, so you might need to ask some questions. Okay, where did the money come from? Is it from a legal source, or is it a result of unlawful acts or something? So you have to be careful as well. Okay, and then the church should set up their gift acceptance policy. Okay, so again, there are different types of gifts. You have the cash and then the non-cash. So the church should have an acceptance policy. When would they accept the gifts, and under which circumstances are they not going to accept the gifts? Okay, so they should have, a clear guidance, written policy or written guidance on, so that they can make the proper decision. Okay, although for small churches, of course, they probably wouldn't encounter much of this. I'd like to note as well that the material that we're using is, um, the CPA, the author, is catering to Christian churches, but not necessarily Baptist churches. So there are quite some differences, okay, in the application. So here in the material, there's a mention of, let's say, insurance benefits, wherein the church is named as the beneficiary, but um, in a way, insurances are proliferating in the US, so it's quite common for them. But here in the Philippines, insurances are not that very common. They are still not widely availed. But of course, it's very useful. It's just that some people are not seeing the eventual benefit of it, because, for example, life insurance. When you insure yourself for a life insurance, eventually the benefit is not something that you yourself is going to enjoy, because the benefit would only arise essentially when you die, because it's a life insurance, and the benefit would actually go to your loved ones, or to the beneficiary. It could be your parents or your children, or you can name the church as the beneficiary of your life insurance. Okay, one of the reason why most Filipinos do not avail the insurance is that, of course, if nothing happens to you, then there would be no benefit. But if eventually something happens to you, then your obligations to your family or to certain organizations, you would not be leaving them behind with nothing. Okay, so insurance is a way to mitigate the risk or to transfer risk to the insurance company. Okay, I think we have a chapter dedicated to risk management. So there is that, right? So essentially, for example, a person, if I die, of course, I wouldn't be there anymore to contribute to the church or to support my family. Okay, but in a life insurance, you can what do you call that? Nominate your beneficiary, who it's going to be. So again, it could be the church. Okay, so if a member, let's say, has no family and they do want to name the church as a beneficiary, then they can do so. So when they die, the benefits would go to the church. Okay, so instead of receiving tithes and offerings from the person, because the person dies, then it would be the insurance benefits that the church would receive. Okay, so there's something like that. Okay, in the US, they have various types of life insurances, which we do not have in the Philippines. Okay, the life insurance in the Philippines is quite straightforward. Normally, they're not transferable, and then the beneficiary nominated are normally irrevocable, meaning you cannot change who the beneficiaries are once you've nominated them. Um, but it can be changed actually. You just have to get the sign, the signature, the approval of your uh, initial beneficiary, nominated beneficiary. So if they agree to change the beneficiary, then you can do that. You just need to get them to sign on the policy or the renewed policy. Okay. So there is that. Like in the US, I'm not sure if you've already seen. So they have different what do you call that? Different types of insurance, but we're not going to discuss that. Okay. And then we have, of course, we've already discussed some tax implications or tax consequences. Another would be again the legality as to the source of the gift or the donation. And then essentially just need to be, the church should ensure that it's legal. The tax consequences can be afforded by the church, and then the cost and the benefit have been analyzed properly. Okay, so there is that. Okay, let's continue with this. Help with accepting and or administering non-traditional gifts. So sometimes, okay, we don't, in a way, again, donations, if it's more than 100,000 pesos, technically or essentially, they are required to submit a tax return or to file a tax return and then pay donor's tax if it's more than 100,000 pesos. Okay. Of course, when it comes to paying donor's tax, it's normally the obligation of the donor, okay, because you're the one who gave us money, gave the donation, then you probably have enough money to pay for the donor's tax, okay? But of course, sometimes it's an agreement between the donor and the donee who's going to pay for the donor's tax, okay? Um, Exemption or tax deductibility of donations. If it's a person, a taxable person, or an organization, taxable organization, making the donation to a church, so there are tax consequences for them, okay, for them. But on the part of the church, normally the church would not be bothered with it. They could simply ask the person, the donor, to settle whatever obligation there is for the donor's tax or whatever tax would be, what do you call that? Uh, would be imposed. Okay. But still, there must be, declaration of the donation in the reports. Okay. On the financial statements of the church, then they would also have to record. Of course, they would record the transaction and they would show it as a donation. Okay. But for the most part, again, since it's not really the church's obligation to pay for the donor's tax, so it would fall on the donor to do that. Okay, acknowledging contributions for tax purposes, since churches are, they normally accept the contributions through the offering bags, and sometimes they don't know who exactly gave, or in case they do, there is that assumption that an individual would not give an amount exceeding the threshold, which is 100,000 pesos in a year. Okay, so sometimes we don't really monitor how much a person has given and if they're paying the donor's tax. Okay, so because it's their obligation, let them do it if they want to. Okay. um okay, I'm going to talk a bit about the taxation, with regards to the implementation of the tax laws or the tax regulations. It's actually a self-assessment. So, if a person would like to adhere to the tax law and would like to file the proper returns to the BIR, then they can do so. But essentially, the BIR would not know if you are, what do you call that? If you are to be obligated, unless you assess yourself and you offer or you voluntarily pay the taxes. Okay, so sometimes people would not bother with it and just make donations and not pay the donor's tax, but in a way, the BIR would have a hard time knowing who made, big donations, um, especially if they are not declared by the donors or the donee. Okay, so something like that. It's a self-assessment, so they thrive on people volunt voluntarily paying the taxes. Okay, but of course, most people are not really aware of the different types of taxes that may be imposed. So that's probably another reason why some actually don't pay the donor's tax or something like that. Okay, so there is that. What else? So I'm going to pause here again because it's been 15 minutes already. I'm gonna continue on another video.